Welcome. My name's Gary Vogel, the president of MEREDA, and we're going to get right into our sector analysis. We're going to dive into our Southern Maine residential forecast with two expert speakers. Joining us on stage for a look at multifamily residential is Brit Vitalius of Vitalius Real Estate, and David Davin is going to follow him with the single-family forecast. So I'm going to welcome up Brit right now. Thank you.
Thank you so much for having me back. I've never been in this slot before. This is like completely different going right after lunch. We've got a lot to cover today. It was an incredibly active, fun, crazy market this last year in the multifamily sector. There's a lot I'm not going to talk about. I'm not going to talk about all the development that's happened. I'm not going to get really deep into Airbnb. There are a lot of topics we're not going to be able to touch. But we're going to hit a lot of fun stuff. I think we're going to go through the sales data quickly. Portland specifically, go into Saco and Biddeford, Lewiston, Auburn a little bit. Talk about rental rates and where they're at right now. And then my analysis, which will include a discussion of beer, general market dynamics, and end with my forecast. So starting with the data, I'm going to go through this pretty quickly, and it really shows this is sales volume in the different metros. So that purple line is Portland. And as I've stood up here in past years and thinking I can look at trends and be some sort of statistician, you can see on the purple line where it kind of flattens there a couple of years ago. And I said, well, look, we had a good run. We went down, we came up, and now obviously it's flattening. And then I was completely wrong, and we got shot out of a rocket the last couple of years, and it just surged up. And the chart on the right shows the other metros, and that basically volume in all sectors is up and up significantly and has been going up for several years. The median sales price is also up, and that's shown here in this slide, and up significantly in most towns, and that's really what's been so hard to keep up with. 20% increases over a couple of years is just kind of mind-boggling and really hard to capture, and frankly not something I saw coming. I thought we were leveling out a couple of years ago, and certainly been anything but that. This takes those same median sale prices, lists out the prices, and shows how they compare across the different metro areas. Portland, the median sales price is over $500,000. That's a staggering number. That includes 2 and 3 unit buildings, and that the median is over $500,000 is unbelievable. In South Portland, it's almost $400,000, and right down to Lewiston, Auburn, down at $132,500. The 2 to 4 unit market in Portland is important. It's a huge market. It's what most of the buildings are, and so that's kind of the residential side of the multifamily market. And this looks at average prices broken down by those sectors, and again, you just see the year-over-year increases are pretty staggering. I've been in this market now for 14 years, and 2 unit prices were $250,000, maybe $300,000 for a long time. And today, the average 2 unit price is almost $440,000. That's just a big jump. 3 units, almost $600,000. Looking back historically, we can see where we are relative to 2005. We're up significantly. 3 units are up 60% from the last peak. So some notable sales to try and give you a sense for what some of these properties are that are transacting at these prices. This is a 6 unit in Portland. It's 2 3-unit buildings actually. On the way up Munjoy Hill on Congress Street, sold for $1.13 to a buyer who planned to do short-term rentals there. This is another 3-unit up on the top of Munjoy Hill, a very grand building, just very majestic. Us real estate geeks love buildings like this, just solid, huge, but was not updated at all, and sold for $950,000. Another 3-unit on Munjoy Hill for $1.1 million. A 3-unit on Cumberland Ave, This number looks pretty modest by comparison after the last couple sales, but this is a 3-unit on Cumberland Ave with no parking, 2 blocks from the shelter. This is staggering that Ed Gardner sold this building, and I asked him yesterday, I was like, how did you even come up with that price? How did you even know to list it for that price? And it was in great condition, and there was a buyer, and he said it was just a perfect storm, and the right buyer had the right use for this building. I'm generally against doing flips. I think they're hard, they're a lot of work, there's a lot of risk, and not always a lot of money. This one, however, is pretty attractive. In 2016, just a couple of years ago, it was purchased for $263,000 and sold 2 years later for $670,000. Now, that's how you do a flip. The market really has to cooperate, and I think that's what we haven't anticipated, the degree to which the market is just supporting all this. And finally, a 2-unit out in Morrill's Corner, John Robinson sold for, again, over $500,000. What's notable is this was kind of a pretty average 2-unit, and it's not downtown. It's not on the Eastern Prom. It's not on the Western Prom. And that's still just a big number, and this is what, again, has been hard to keep up with. Looking at the commercial aspect of the multifamily market, and these are the larger buildings that are based on commercial financing, which is 5 units or more, we saw price increases continue, and the cap rates seem to generally be flat. There were a couple of sales that were 6 cap or lower, but generally I think we're still in the 7 to 7.5 cap range. One thing that was different this past year is there were just a lot more transactions in this segment in Portland. 2 years ago, there were 13 sales on the MLS in this segment, and last year there was 23. That's a huge increase. And what it feels like is happening is that the sellers who have been around and for whatever reason they're time to get out of the market, they're retiring or they just want to get on to other things, they realize that we've had a good run, maybe we're coming to the end of a cycle and it's a good time to get out. But there's still a lot of buyers who see opportunities in Portland and want in. And so they were able to come together this year and a lot of deals happened. The other point I want to make here is while the cap rate didn't really move, I think it effectively moved in that we saw the cap rates at 7.5% was for what I would say were a little bit lower quality properties than in past years. And buyers are still believing there's opportunity to improve them and therefore willing to take the same cap rate for a lower quality property. A couple notable sales in this arena. I was fortunate enough to represent Hardy Pond Construction in their renovation of this church off on the corner of Forest Ave and Pleasant. 25 units for $4.3 million, sold to a 1031 out-of-state investor who had sold an asset in Texas and was moving up here. We thought it was a low 6 cap. I think the appraiser thought it was closer to 5, but that was a low cap rate for Portland. Tom Gadboy sold a portfolio in Sanford, 106 units, I believe, to some out-of-state investors from New York. One of those sort of just basic, fairly average portfolios sold to a local investor on Cumberland Ave for about $90,000 a unit. And then 27 Morning Street, it was a 6-unit up on the hill, sold for $1.1 million. Again, that's just one of those big numbers that you see. They were just approached, it wasn't even on the market. And what's notable here is he bought it for 1.1, approached the seller, convinced him to sell for 1.1. It's now back on the market for $1.5 million. I don't think it's sold, and I think this is where I'm feeling like we're in a little bit of the rub of the market as it's been so hot. We see investors start to speculate and kind of pay all the money and then think they're going to get another 50% more. And in some cases they may be right, but in some cases they may be starting to overshoot. In Saco and Biddeford, while the total number of transactions declined, we saw the sales volume was up. And like Portland, the number of the larger sales nearly tripled. There's a lot of great new development. There's a lot of stories going on down there. I think at the moment it's a great thing for all the multi-units down there, and it's sort of the rising tide is lifting all ships. Over time, if we start to backslide at all, I'm curious if all this extra inventory is going to impact sort of the existing stock, all that existing mill housing. Is there going to be a pushback on the rental rates down there? But at the moment, it's really active down there. Median sales price is up 29% year over year. Here you can see the median prices per unit, per square foot, a couple sample sales. I think we believe the cap rates are declining there. I don't have great numbers there. And the price per unit is getting closer to where we saw them in Portland for years. Portland price per unit for this size property was like $68,000 to $72,000 a unit for a long time. And now Saco and Biddeford's up to $60,000, $65,000 a unit. So just seeing these things sort of move outside of Portland. Lewiston Auburn is also really thriving at the moment. Total sales volume was up 32%, and really saw a cap rate drop in Lewiston Auburn, as what seems to be happening is that the buyers are accepting a lower cap rate because they believe they can go in and improve the property and then get a higher yield. There's a median price per unit, square foot. A couple sample sales. That brick property, that's one that every multi-unit owner would love to own a building like that. John Leahy sold that, had a call for offers, had 10 offers on that property. I think he said he believes he could probably resell that again for more money 6 months later. That's just it was a great deal. But those are approaching Portland cap rates historically, an 8.5 cap there, an 8 cap for that next sale, that next portfolio. Portland rental market. I am really helped this year because the Portland City Council commissioned a professional market study on the rents in Portland. And so this was a much more exhaustive study than I could have done personally. I encouraged the landlord community to participate in the study, and they wound up with a lot of great data. And what the conclusion was from the study is that rents have leveled off. And it was what I was feeling last year, and if you look at how we've stacked the numbers up year over year, they certainly seem level. So 2018, the red numbers, those are directly from the Portland Rental Survey. It's on the Portland City website, and they seem to be level. The other piece here that I mentioned last year, and I want to talk about again, is with the market rates leveling off, the perception of affordability, the feeling of affordability is catching up, and is getting better, and that's because the subsidies have caught up. So the Section 8s, the GA fundings are now at equal to or exceed the market rents. And so this graph shows where the real challenge was a few years ago. And you look at that gap back in 2014 and 2015. So the red and the green there, the 1 bedrooms and 2 bedrooms, those was the market rates. And the gray line was the subsidized. And so if you were going in with a Section 8 voucher, a tenant was going in with a Section 8 voucher, they just couldn't pay as much as market. And so there was this real gap. So not only did we not have a lot of housing availability and rents were going up, but the folks who needed the help most just couldn't get a rental. And so I think that was really exacerbating the sense of rental crisis back when the Press Herald was doing its story on the rental crisis and all that. Because what we were hearing on the ground was the people who were in the units could afford the units. It was that there were others who couldn't. And that this graph shows how challenging that time was. Well, now they're coming back together, and so the feeling out there on the ground is different. And if you look up to 3 bedrooms, you see, in fact, it's flipped, and that gray line is the subsidized 3-bedroom rent is up approaching $1,800, which is maybe higher than what we think is the market value. So that dynamic is a lot better. What makes me curious is all these folks who are coming into town and paying all this money for the properties, for these multi-units, in the hopes of fixing them up and getting the top rents to all the hipsters and folks with money. One, are we saturating that upper end rental market? And we may be, and don't have great data, but they may also start to notice that they're getting calls not just from the young hipsters and sort of the top tier owners, they're getting calls from subsidized tenants. And is that why they're paying all this money for these properties? And see how long some of these folks stay in the market and find a way to make it work as a landlord when your applicants are both market rate tenants and subsidized tenants. This slide just compares the rental rates across the different towns. So you have a sense for how much less it costs to live in Saco and Biddeford or Lewiston Auburn relative to Portland. You know, Saco and Biddeford generally is a couple $100 less. Lewiston Auburn maybe another $100 less than that. So now we get to the fun part. The beer. Not exactly beer. I'm not talking about the brewery industry. I'm talking about the fact that the market has felt frothy, and that was a term that we heard a lot over the last year and a half. I'm going to go to a different glass of beer to illustrate my next point. And what's been challenging with the market is this. As brokers, we go to sell a property, we come up with the comparable values, and we have a sense for where we think the market is. But we know the market's hot, and the seller wants all the money, and so we list it a little bit higher than that. And then, this is what's been happening. We go out in the market, and we get multiple offers, even above that. And that's just what our life has been for the last year or two. All these multiple offers at prices that in some cases we couldn't even predict or figure out why they were there. But some things started to shift a little bit this year, and it's really hard to find in the data. We'd go through the same process, we'd do comparable sales, we'd list it a little bit above that, and then this would happen. We'd get one offer. We'd still get our price. It would still close. Everything looks great. But internally, Chris Sullivan, my business partner, and I, were kind of saying, well, what if we didn't have that one buyer? How deep is this market? It feels like it's thinning out a little bit. And so I think we're just in a process, in a period of transition where the market is still good. It's very healthy, but maybe it's not crazy. Maybe it's not frothy. And frankly, that's probably a good thing. So some of the dynamics that we're feeling in the market, pushing values up still, there's still a lot of capital out there, a lot of 1031 exchanges looking for a home, Airbnb, sounds like Steve has some concerns about the longevity of Airbnb, but at the moment in Portland, it's still a viable alternative, and it's still driving some of the sales. Condo conversions are driving some of the sales. So those are still pushing values up and supporting the values. On the other hand, the rents seem to be flat, interest rates are going up, and all this new inventory may start to challenge the existing stock. So we're just feeling all these different dynamics in play. Trying to find evidence for my theory that maybe things are slowing down a little bit and the data was hard, and this is about as good as I could get, is the ratio of pending listings to active listings. And in 2017, pending listings were 76% of the active listings, and in 2018, they were 58%. So 58% is a great, healthy market, but it's not quite as much buyer pressure as we were seeing the year before. So that's all the data I got to support my theory here. Other things that make it feel like maybe we're kind of near the top. Some of these sales, it just feels like more out-of-state buyers, more first-time investors, maybe more new players to the market that are driving some of these prices, or the prices are based on condo conversions. In the condo market, there's a lot of players there right now. There's a lot of projects going on. I don't know if they're all going to survive or the best will, but you can't just show up and just flip a building and think you're going to have an easy condo flip. Cash flow investments, flips, we're seeing folks, buy a building and then just relist it for more money and think they're going to make a lot. And then the short-term rentals are part of this market too. For the first time in several years, we've seen price reductions. I don't think I've had to reduce a price on a listing in a couple of years, and this year we had to do it a few times, and that was sobering. And again, a feeling that maybe things are just changing a little bit. There's fewer buyers, at least for some properties. I think as properties, the listed properties that are more distressed are facing a little more challenges out there in the market, and that some of those buyers out there looking at these distressed properties are not as qualified as we had a couple of years ago. By which I mean they're the first-time buyers. They're the buyers who need FHA financing in order to buy a property. Well, FHA financing doesn't like peeling paint. It doesn't like loose handrails. So if what you're trying to sell is that, and the only buyers showing up have FHA financing, then things are getting harder, and we're feeling a little more tension in the market. So, all right, I'm doing okay on time. So my forecast is like this. I think macro forces are a big deal. Like, say, if the government were to shut down for a while, any general market volatility or political volatility, it just has an increase on buyer confidence. And so when people say, why do you think it's slowing down, or where are the buyers? Say, I don't think it's that they just watched the news last night and made a conscious decision not to go out and buy. I think there's just, it's sort of in the air confidence. In Portland, I think the values are going to flatten some. And again, that's okay. They just went up 23%. It doesn't mean we're going down. It means we're just not going up at 23%. But I think we are going through some sort of shift. And it's going to feel, at least to brokers like me who are trying to price these things, as turbulence, as we're trying to just battle with these. Are we going to find that one buyer and therefore that's the value? Or is maybe the value settled out and a little more sober, and we can kind of feel where the ground is? And that's going to continue to be hard. I think the prime locations, Munjoy Hill and downtown, the bigger buildings, I think they're going to hold their value. There's still a lot of opportunity there. There's still a lot of capital looking for those units. But I think the smaller units and more distressed are going to face more challenges. And so maybe we're going to have some separation here in the market, price-wise, value-wise. And I think the rents probably are going to remain flat. Anecdotally, I gave this presentation to my landlord group a couple nights ago, and I think we're all feeling that the middle market, those market rents are actually pretty good right now, and it's a strong market. For the middle of the winter, we're doing okay. The upper end is a little slower because everyone's chasing that upper end. So maybe it's getting to the point of saturation, or maybe it's just winter, but I think that's where we need to be watching out. Regionally, Westbrook and South Portland, I think they're going to continue to do well. Again, they're not going to jump at these crazy rates, but they're healthy. There's just not a lot of inventory there, and they're great communities and great alternatives to Portland. Saco and Biddeford, I think, is going to continue to thrive. There's just so much activity, so much going on down there. I think that's going to be a place folks continue to look for opportunity, as well as Lewiston, Auburn, where you can actually get some sort of rate of return on your investment and see opportunity. I just caution, seem to be the conservative guy, just keep an eye out, because when things start to slow down, these are the markets they also pull back from. So it's a great year. It was fun. It's hard to keep up with. I think we're entering a healthy market, I think, as you're going to hear from David in a minute, is almost too hot, where buyers can't buy. We need some balance between buyers and sellers, and I think that's in our market. We've got a great community, and I think we're going to have another great year. So thank you very much, and I want to now introduce David Davern from Portside Real Estate.